So we just discussed gold, and I think that it's even more interesting to discuss situation in Bitcoin. So Bitcoin has finally broken higher after several months of relatively weak performance, and we discussed it earlier in our previous observation. And we have repeatedly discussed the battle around the 62,000, 60,000. Here it is, and the mark here. So, and the price action in late June and early July was particularly telling. Bitcoin attempted to break below this level. Here was this situation, and it was a very significant moment. As a result, a classic bear trap formed below 62,000, 60,000. And the first confirmation came when Bitcoin moved back above 64,000. The market then broke through 67,000, where a large-scale liquidation of short position began. According to some estimates, on August 19, the crypto market experienced one of the largest waves of short liquidations on record, with more than $1 billion in bearish positions being forcibly closed within just a few hours. But there is an important difference between this move and a typical short squeeze. The rally was also supported by actions from the US Treasury, which announced an increase in the size of its buyback operations for longer-dated Treasury securities. Falling yields and expectations of improved liquidity conditions provided additional support for risk assets. At the same time, demand for spot Bitcoin ETF increased sharply. So we now have a particularly interesting combination. Spot demand, derivatives market demand, and forced short covering are all working in the same direction. This creates a much stronger foundation for a continuation of the move than a simple technical rebound. At the same time, I would not rush to declare the return of a global bull market just yet. On daily chart, Bitcoin still remains within a broader bearish structure. The 75,000, 80,000 area lies ahead and represent the next truly significant technical test. That is why the most important thing now is not the fact that Bitcoin rallied yesterday, but the quality of the follow through. If spot demand and capital inflows remain strong after a significant portion of bearish positioning has already been liquidated, that would provide a much stronger argument in favor of a continued recovery. However, if momentum begins to fade quickly and broader risk appetite deteriorates again, Bitcoin could easily return to the same problems it faced before. So for now, there is no reason to get ahead of the market. The bear trap has played out. The short squeeze and shorts has been squeezed, and now Bitcoin need to prove that this move is being supported by genuine and sustainable new demand.